What's up, guys? I'm nobody special. We got the CPI read this morning. Inflation is at 6.2% year over year. That is the highest inflation read in almost 31 years. But I'm sure everything's going to be fine. Thank you for joining me. I'm Jack Gamble, and I'm nobody special. And the inflation number came in today, and it is way hotter than even the analysts were expecting. We are at 6.2% year over year. That is the highest inflation read since December of 1990, almost 31 years. The biggest contributor by far was energy, of course, and that was a 30% year over year change in the energy index, and that is a bad, bad omen of things to come. Now, guys, before we get too far into the numbers, I have to ask you, could you please like and subscribe to my channel, hit that notification bell. It really helps me out, and it helps me to keep this channel growing. Now, with that, we are going to shrink my big, fat melon of a head and get into the CPI numbers. And, folks, it is not good. The Consumer Price Index for all urban consumers increased 0.9% in October. That's the month-over-month number, on a seasonally adjusted basis after rising just 0.4% in September. Over the last 12 months, the all items index increased 6.2% before seasonal adjustment. The monthly all items seasonally adjusted increase was broad-based, with increases in the indexes for energy, shelter, food, used cars and trucks, and new vehicles among the larger contributors. The energy index rose 4.8% over the month, as the gasoline index increased 6.1% and the other major energy component indexes also rose. The food index increased 0.9% as the index for food at home rose 1%. And again, those are month-over-month numbers. The index for all items less food and energy, because people don't need to heat their homes or eat, right? That rose 0.6% in October after increasing 0.2% in September. Most component indexes increased over the month, along with shelter, used cars and trucks, and new vehicles. The indexes for medical care, for household furnishings and operations, and for recreation all increased in October. The indexes for airline fares and for alcoholic beverages were among the few to decline. So that's nice. We can still get on a plane and fly away from our problems or drink our problems away. That's getting cheaper, at least. Everything else is going up, folks. Everything. And not only is it all going up, but it is going up faster than it went up last month. All right. This comes as there is repeated assurances from our leaders and from our central bankers that this problem is contained, that they have got it under control, that it's all temporary, that it's just because of the virus or the Delta variant or this or that or the cerveza sickness. Does this look like an inflation problem that is being contained? Does this look like an inflation problem that is under control? You tell me. Getting down into the numbers here and, just glancing real quick right away, you can see there are some very, very big numbers in this energy column, folks. And this does not bode well for the CPI index, all right? The energy index as a whole up 30% year over year with a 4.8% increase just last month, okay? Now, if you go back some of these previous months, the energy index, 1%, 1.3, 1.6, you can see this increase is gaining steam, and it's gaining steam fast. I mean, we've got 49.5% for energy commodities, 49.6% year over year for gasoline, 59.1% year over year for fuel oil. Now, I want you to understand something here, folks. While this may be the biggest contributor to your CPI index this month, right, a 30% year-over-year increase in energy is very bad for the CPI index this month. What it's also very bad for is the CPI index next month, because everything has an energy input cost. I don't care what it is, okay? Every service, every good has to either be dug out of the ground, mined, or grown, or harvested, or shipped on a truck, or packaged in a plant, or heated and cooled, right? Everything has an energy input cost. So the fact that this energy index is rising 30% year over year, that means future price increases for everything else. And we're already starting to see that with the stories I've been covering on this channel about fertilizer prices going up, and how because the natural gas price has gotten so expensive, a lot of fertilizer factories have shut down production. And that means a lot of farmers are having to cut back on their fertilizer use or their fertilizer orders for this year, which means they use less in the spring, which means their crop yields go down next year, which means next year's food prices are getting more expensive. So these big jumps in energy right now, this is future price increases being born, okay? Important to remember that. Energy hurts CPI right now, but it also hurts CPI tomorrow. Moving on here, let's put me over here. We also saw some things that are not terribly surprising, right? New vehicles, 1.8% month over month or 9.8% year over year. Used cars and trucks, those prices are up again. They've been fluctuating quite a lot this year, but the chip shortage, although we're starting to hear whispers that the chip shortage may be getting under control, or at least showing early signs of getting under control, as far as the availability of new cars and trucks, it's still essentially zero. So until we start to see more cars on the lot with prices and stickers coming down, this problem is going to continue to get worse. Regardless of what the rumors say, cars and truck prices are still increasing. The numbers here don't lie. Scrolling down a little bit more, there's one other thing I want to mention here, and that is this shelter number coming in at 0.5% increase month over month or 3.5% year over year. Now, if you've been following my channel, you know that I have been very suspicious of the Federal Reserve's numbers when it comes to shelter, because the largest input, by far the single largest variable in the whole complex CPI calculation, is a statistics called owner's equivalent rent. All right, it counts for almost a quarter of the whole CPI index. An owner's equivalent rent is a very unscientific method of determining the average rental or shelter cost in the country. And it basically consists of calling up homeowners and saying, how much would you rent your house for? Okay, got it, thank you. Well, owner's equivalent rent has barely budged, even though home prices have skyrocketed in the United States over the last year and a half. Really, since June of last year, home prices have been going up in almost a straight line. Okay, now the story with Zillow and everything, maybe the real estate market is at a top or approaching a top. But the fact is, when it comes to owner's equivalent rent and the overall shelter cost, as shown in the CPI index, look at these numbers going back the last few months. 0.4%, 0.3, 0.5, 0.4, 0.2, 0.4, 0.5. Folks, nobody has seen a rental increase that low this year, right? If your rent has gone up, your rent has gone up 15, 20%, not a half of 1%. So the Bureau of Labor Statistics here is still vastly understating the increased cost of shelter for the average American. And that is by far the single biggest input to the inflation statistics. So while energy prices are causing these numbers to skyrocket and they're kind of the harbinger of future increases, we need to keep in mind that this massive increase in the cost of housing in the United States is still not reflected in the CPI index, which means we have some much higher CPI numbers ahead of us still. Remember that when these elected officials and when these central bankers and these analysts are on TV saying these are isolated instances that are going to work through, and it's the supply chain or the ports, and that this is going to solve it or that's going to solve it or these problems are going to go away. Folks, we have not even begun to see the highest CPI numbers we're going to get. And just down here, I want to read you some of this. The shelter index increased 0.5% month over month as the indexes for rent and owner's equivalent rent both rose 0.4%, and the index for lodging away from home increased 1.4%. So again, they're still saying that owner's equivalent rent is only going up a fraction of 1% month over month. And folks, that number is just grossly understating the reality of housing costs in this country. Right? Rents are going up much faster than the CPI is admitting to. Now, real quick, I just want to show you a couple of charts here. All right, here's gold. So far, gold is loving the news today, up $32 or 1.8% on the day. Now, I would also mention here that we have finally broken above this very important technical level of about 1835 to 1837. You can see where my cursor is here, that we've kind of struggled at this level for the last couple of weeks. Well, we finally broke above that in a meaningful way. And as long as this current rally holds, this is very good news for gold prices, at least in the short term. And, you know, I've talked about real yields in the past. Real yields are the yield of Treasury bonds minus the expected rate of inflation. are as deeply negative as they have ever been now, especially on the longer end of the curve. So there are some very bullish signals for gold that are out there. Just keep that in mind. And looking at silver, the silver chart looks even better. While silver may be struggling to recapture this same resistance line, let's put a couple of lines on this chart here. Let's put one across here, right? So it looks like silver is only just now breaking above that resistance line, which is right around $25. I do want to point out this lovely, lovely little inverse head and shoulders pattern that we appear to have here. And if that's the case, if that really is a true inverted head and shoulders, then that could signal a reversal of this much longer downtrend that we've been stuck in since August of last year, which would mean onward and upward to new highs. Pardon my sloppy drawings there. Here, let's fix my arrow. So, some bullish signs in precious metals. Again, I'm not a financial advisor. This is not financial advice. This is just financial edutainment. I want you to do your own research and your own DD, arrive at a decision that is right for you based on your unique situation. But long story short, folks, inflation is higher and higher and higher month after month. It's continuing to get worse. The excuses that we're being fed by leaders and central bankers are baloney, to put it mildly. And that all of these signals, things like fertilizer costs going up, things like energy costs going up, the fact that the housing prices have still not been reflected in owner's equivalent rent, all of these factors tell me that we still have much, much higher CPI numbers coming in the future. So get used to these inflation numbers. They're only going to get worse. Folks, I want to thank you for your time. Thank you for watching this video. Don't forget, give me a thumbs up, subscribe to my channel, and hit that notification bell. It really helps me out. It helps me to keep this channel growing. In the meantime, live small and dream big.